So, good morning, everyone. Welcome to Medicon Village and Medicon Village Business Academy. Today, we're going to have a seminar regarding the Cornerstones of Funding Strategy. And before we start, we would like to have a short introduction to Medicon Village and the Business Academy. So, Kerstin, please take it away.
Thank you, Johan. My name is Kerstin Jakobsson, and I'm the CEO of Medicon Village Innovation. And I'm so pleased to be here today and to introduce one of our seminars in the Business Academy, which is a very important tool in order to scale up and support company in that process. Because we have a lot of supporting organizations like the Smile Incubator for the startup companies, but they also need to be commercial, and in order to that, it's important with the support. And we have more than 150 companies all focusing on people's health and well-being at Medicon Village. And what's very important is that we don't only have the researchers and academia and developing companies, but we also have all the service providers and CRO companies that can help, and it's an important part of the innovation ecosystem. So most welcome today, Johan, which is one of the founders of Business Academy as well.
Thank you. Thank you very much for that introduction. And let's continue with the seminar, which is named The Cornerstones of Funding Strategy, What to Do Today to Be Successful Tomorrow. But so we're going to go through shortly what Nye Consulting do, and then go into a funding strategy, and then go into a Q&A in the end to see what you have, your thoughts and considerations from the audience today. So, shortly, what does Nye Consulting do? In one sentence, we develop and refine and implement business development strategies for early-stage life science and tech companies. So, we can follow a company from start to commercial launch. And when I say a company, we have different types of customers. We work with universities, venture capital funds, and also corporate venture capital funds. So from the university side, we work with innovation offices from the leading universities in the Nordics. So primarily Lund and Uppsala, but also the Karolinska Institute. On the investor side, we work with leading early stage investors, such as Almi Invest, but also corporate VCs such as SEB Venture Capital and Lundbeckfonden, as well as evergreen funds such as Industrifonden. This is a selection of companies that we've been working with since we were founded in 2013. So it's a wide selection of both therapeutics, diagnostics, and medical devices. We have a complete early-stage commercial validation service, and by that we mean we can follow and support companies from inception until Series A and beyond. And it starts with establishing market potential, externally validating a target product profile for a therapeutics company, then go into a pre-revenue valuation modeling, include in a go-to-market strategy in order to identify how to reach the market in the best optimal way, including that in a business plan. And after that, we have commercially validated a company. Then we also offer funding services through our own network of business angels and early stage VC, as well as VC, venture capital and corporate venture capital funds on a European basis. And hopefully in the end also reaching a partnering, licensing or M&A. So this is a full solution offering from inception to potential partnering. Right, so going into a funding strategy. It's important to mention that a funding strategy is not something unique to do on its own as a separate process. It's an integrated part of commercialization. Meaning, especially when it comes to what to do today to be successful tomorrow, meaning that there are a number of activities and considerations to have early on in a development of a new company, because it will have implications down the line. It always starts with a company focus, the development phase the company is in, and the goals that the company has. So within life science, there are different sub-segments that have different time to market. And depending on where you are in the development phase, you have different considerations to make. And when it comes to goals, it's also a matter of how far do you think you will be able to run this development by yourself before you reach partners. And it's also important to mention, as Justin mentioned regarding the ecosystem at Medicon Village, you need a lot of different support and experts along the way in order to make sound and relevant decisions in a timely manner. So there are multiple development steps before reaching the market, and we'll go through 3 different sub-segment development steps. As you see for therapeutics, it's the different development steps follow the clinical trial development phases. And you can also see that there's an exponential development when it comes to cost and value over time. It's 10 to 12 years, more or less, that you can expect to develop a company. And the further you reach in this clinical development process, the more cost you will need to take in form of financing clinical trials. But there's also a need for a sound funding along the way. I'll get back to that, what that actually means. From a medical device point of view, it can also take quite a long time, but it's considerably shorter than therapeutics. But you will be expected to reach all the way to market before you can have any support from potential partners. Diagnostics is a form of medical device, but it's also normally faster to reach the market with the diagnostic, but they have other complications and challenges compared to therapeutic when it comes to payer, and business model. So each of these phases represent a value inflection point, and those are very important when it comes to developing or how to fit your funding strategy, because at each value inflection point you increase the value of your company and also enable you to, well, it has demands on how to move forward. So at each value inflection point you need to have both scientific and commercial validation. A lot of companies focus solely on the scientific side, and that's normally natural because the founders are on a general note from academia. So scientific validation is their is the home turf, so to speak. But the commercial validation is equally important, and you need to develop a scientific data package and also commercial data package. And it's important to understand what kind of requirements these data packages has and what they should consist of. So we have different examples here. The actual lists are quite more elaborate, but looking on the scientific data package side, it's important to understand what kind of requirements that potential partners from the industry side have, what they want to see. So what so-called killer experiments should be pursued early on to prove that the project is actually relevant and sound to work with. What kind of target product profile will the potential therapeutic have, and is it validated in the market? And then looking into what kind of partnering data requirements are there, what do they want to see in order to attain a value, and what clinical trial design variables should you go for. And this information could be gathered in part from working with us, but also especially from working with CROs and other other clinical trial design specialists. So as mentioned before, it's important to have a group of specialists to support early stage companies. From a medical device and diagnostic point of view, there are also data package expectations, especially when it comes to sensitivity and specificity for diagnostics, but also when it comes to medical devices. There are entrance barriers that needs to be taken into account, and there are product specifications that needs to be understood when it comes to development and procurement from hospital systems. On the commercial side, there are also data package requirements. It's important to understand if the potential therapeutic would have a meet an unmet medical need. Is there a large enough total addressable market? Is the patient population defined and clear? What kind of current treatment competition would you have? And what is the future competition of therapies in development right now? Then what's the patent situation and timing aspects? These are really important because and really requires a patent expert. How should this strategy be devised, and when should you patent what? There are very important timing aspects to consider. What kind of market access variables do you have? How can you prove that a potential therapy in the future would be relevant and interesting for a healthcare system? So that would mean you need to have a health economic evaluation, also from a therapeutic and from a medical device. Looking at the medical device side, this goes also for diagnostics. You need to understand and devise a business model that is clear and often consists of a standard device and a consumable. You need to understand and develop a go-to-market strategy to really choose your end focus group carefully. And you need to consider regulatory compliance. These are just some of the aspects that is important at the different value inflection points, and the earlier you have an idea around these aspects, the better. Because this will influence the value of your company and therefore also the funding strategy that you need to do. It may seem strange at first to consider exit opportunities, but it is important because it will determine what kind of strategy you will develop and implement. Some would prefer to go for or plan for taking their project all the way to market, but it has a lot of cost and funding need attached to it. So some companies have a clear focus on establishing a trade sale, meaning they want to partner with a larger company and then sell their project to them, and then the partner would bring it all the way to market. Licensing is another potential route that could be relevant, where you license your IP to a larger entity, and then that entity would then commercialize and bring the product to market. And some also go for initial public offering, where you list your company, as it's possible in Sweden, in a early stage setting at the multilateral trading facilities. We'll come back to them later. But having an idea of how far you will develop your project is important in an early stage, because it will develop. You will understand what kind of scientific data package and commercial validation you need in order to validate your project. Once you have these aspects in place, or you have considered them, you need to investigate the different funding sources that could be relevant for your project. It also depends on your sub-segment, your time to market, and what development phase you're in, and the different investors' investment horizons. But there are three main groups of funding sources. So grants and so-called soft funding, meaning non-dilutive funding coming from public sources, governmental sources, either from national or European Union level. So that could be state innovation grants from Vinnova. It could be EU innovation grants, such as Horizon 2020. There are different programs. And it will most likely require a specialist grant consultancy, such as GAO Consulting, for instance. Looking at the private funding side, you have business angels and business angel funds. You have so-called family offices, and they are a group of rich, wealthy individuals or a wealthy family that have professional management for their funds. You can also have venture capital funds. And they are closed-end funds or evergreen funds, and we will get back to all these particularities in a few slides. You can also work with corporate venture funds that are investment arms of industry stakeholders. They could be both strategic and financial. When it comes to public funding, Sweden has a elaborate ecosystem of different different marketplaces. And the three main ones are Spotlight Stock Market, the Nasdaq First North, and Nordic Growth Market. And to reach these markets, you would require a corporate finance advisor of some kind. If you want to list yourself on Nasdaq First North, you need a certified advisor. So these are all interesting and relevant funding sources with different requirements, of which we will enter now. So going into to the particularities of these different investors, meaning that you have different investor focus that will fit your development phase differently. And this is just an overall description of what type of funding would they typically go for, what's their investment horizon, what's pros and cons. And this could be a seminar in its own, but it's good to have this brief understanding. When it comes to business angels, it's an investor with industrial knowledge normally that have made a considerable amount of money that they wish to invest in their own industry. So they normally invest in projects that they understand, with an investment horizon of 3 to 5 years. That could differ. The pros of working with business angels is that you have access to an industrial network and other business angels and industry knowledge. They are normally relatively fast in their investment decision, and they will provide an in-depth understanding of your segment. On the con side, they might have limited assets under management compared to other funding sources. They could also have limited valuation understanding in early stages. But that's a matter of discussion. Looking at family offices, as I mentioned before, it could be a wealthy family or a group of investors with professional management supporting them. They have usually a longer investment horizon of 5 to 10 years, or potentially even beyond. So it's a typical pro of working with family offices, that they have a long-term investment focus, and they also often focus on specific therapeutic areas that could be related to their founder or some kind of other reason for their investment. On the con side, that could lead to that they're not necessarily always business-driven investment decisions that could have different implications. Lately, we've also seen that there are business angel funds, meaning there's a group of business angels that have pooled their resources and created a closed-end fund. And that's an investment vehicle that is investing during 10 years, investing and divesting within 10 years, and having 2 years to close the fund afterwards. you will get all the benefits of a business angel fund, and also the ability to pursue more follow-on investments since they have pooled their resources. So that's a quite exciting investment vehicle to consider. On the con side, there could sometimes be governance structure, and decisions can take longer to reach, given their well, it's a group of business angels that needs to have. It turns into a larger decision. Looking at the venture capital funds, a similar thing there. The basic of a venture capital fund is you have a group of professional investors with some kind of specialist focus that are funded by institutions, family offices, and high net worth individuals. They also have a 10-year horizon and 2 years to divest, normally. They have good access to networks, normally. They have a larger asset under management and an in-depth understanding, and an investment from this type of funding source can lead to a stamp of approval that could improve your chances of finding capital down the way. On the con side, there could be a challenge when investment decisions are driven by how far they have come in their investment and divestment phase. So if they are late in their investment horizon for their fund, they tend to focus on an exit, and that's where it needs to be discussed, different horizons. You can also have a venture capital fund with an evergreen focus, meaning that it's the same type of investors, but they have a longer investment horizon because they don't have a fixed time frame where they will close down the fund. So it could be 10 years and beyond. We have similar access to network and large sums, and investments are driven by a more long-term focus. When it comes to corporate venture funds, they are a part of a larger industrial player, their investment arm. So it could either be a strategic focus where the company itself invests in ideas and projects that are relevant for the strategic purposes of this company, or they can use their industry understanding to have a financial focus, to focus on investing in companies that can lead to a good return. They normally have either a closed-end fund structure or an evergreen, and they also have access to good networks and development capacity to support their companies. Investment decisions are normally driven by strategic priorities. When it comes to public funding, where you list your company at one of the multilateral trading facilities, you will have access to a different kind of market with retail investors that in the most cases have limited industry understanding. They could have an investment horizon of everything from 3 weeks to 10 years. It is a good opportunity to have access to liquidity in good times. Given the scrutiny you have to go through in order to be listed, it also represents a stamp of approval. And you can also have an international access to investors in other countries, given the marketplace openness. It will, on the con side, lead to an information and news feed that you need to share with the market. You need to comply with financial regulatory compliance, and also there will be limited or no route back to a private funding opportunity after this. Finally then, grants. It's a grant from a national or European Union-based agency. They normally have an extensive application and evaluation situation. It could take everything from 12 to 24 months. On the good side or the pro side of this, you have a good stamp of approval. It's non-dilutive funding, so you won't be diluted if you manage to reach these supports. And it's also available throughout the commercialization process. On the con side, it also often requires co-investors. So to obtain the full support, it could have long lead times, and it will require specialist consultancies to develop the applications. A lot of information in a short time, but moving over to how we think that and see that these investors typically are activated throughout the development process. Starting with therapeutics, they require a lot of capital to bring a therapeutic idea all the way to market. In the start, if you're looking at how will a private fundraising process develop, you would have pre-seed and seed funding, and then leading to ever greater fundings until you have an IPO in the end in the large cap. This is a typical development that you see in the United States and also in Europe, and in sometimes also in the Nordics. Then you would also have a similar, what's the equivalence if you go for a public funding source, listing your company early. This will be the similar way to move. So business angels and family offices would normally support the company early on in pre-seed and seed phases. And then as the funding need increases, you would have venture capital funds, corporate venture capital funds, or an IPO at the multilateral trading facilities in Sweden. Or if you have a good enough data package, you might even reach a potential industry deal really early on. But as you move further and the costs increase, it's primarily industry licensing or M&A deals, or if you go for the public funding routes, you would have rights issues to fund your company until you reach some kind of deal in the end. Looking at the medical device sector, you will have a shorter time to market, as mentioned before. It's a similar funding route given the private and public routes. So you will most likely not need as much funding, but it will still have business angels and family offices, or even IPOs in a relatively early phase, then leading to venture capital funds and corporate venture funds moving in after Series A. Finally, looking at diagnostics, it's also a type of medical device. Business angels and family offices would be able to fund the company early on until Series A, and then VC funds, corporate VC funds, would move in earlier. Actually, IPOs could actually even be introduced earlier in Sweden, depending on how far the company has come in a data package development. So these are some examples of what type of investors you would then activate. Finally, then, from an early funding strategy cornerstone point of view, it will have implications early on what you do and what have to do later. So when looking at the commercialization of a project, it's important to start with defining your development steps to reach the market, given your project's particularities. So for a therapeutic, you would know you would have to go through clinical trials, and that leads to a certain number of value inflection points. And this in turn will lead to a scientific data package requirement, and also a commercial validation need. How far you will run and develop your project will also be determined by exit considerations. How much do you need to do? And this will ultimately lead to a financial forecast where you have an understanding of your funding need, and also a funding time frame, and then an investor preference and what investors to target to fund your company journey. And by that, I open up to Q&A. So, yes, any questions from the audience? Yep. Justin.
Thank you for a very interesting presentation. Can you see some implication of the pandemic now regarding raising money?
Yes, we have seen some pandemic implications, and we had a chat about this just before we started today. The clinical trials have to some extent been halted, unless it's related to some kind of lung disease. So that's a challenge. So timeframes have been stretched. Early on in the pandemic, when it was very new, if that's a term, then some investors suggested pandemic rebates in valuation. And then we have seen that there has been a recovery. And I think by today, the Swedish stock market has completely recovered, which is interesting to say the least. But some of these some investors, we thought that there would be a halt in venture capital activity, but we have not seen that. Another important aspect is that the normal or a very frequent meeting place for the projects that seek funding and investors is to meet at conferences. And having virtual conferences, as most of them are today, is a challenge, because you don't get to meet people physically, and you don't get to meet people spontaneously. So that's a challenge too, that have funding implications. One more. Yes.
Yeah, because I think it's really interesting when I say, because the stock market is really high. Because at Medicon Village there are 22 companies on the stock market, on those that you mentioned.
Yes.
And last year and also this year, the market cap of those companies were around 9 to 10 billion, roughly.
Yep.
When I made a calculation the last day of last month, it was 17.7 billion, which is almost a doubling of the market cap. So there is a lot of money for good projects.
Absolutely, and it's also interesting because the life sciences as a sector, it has been quite apparent that our sector is vital to fight this pandemic. Meaning that if you have a good project, then you would also find a good number of people that wish to invest. But it's also important to have a commercial validation, not only a strategic, not only a scientific validation, but combine both commercial and scientific data packages, because then you can also prove a value and obtain a better valuation when in contact with potential investors. And I would also like to mention, when it comes to the stock exchange, interest rates are very low, and different investment classes are the most relevant investment class if you want to have return on your investments is still the stock market, and there are very few or no alternatives, which could be one reason why there has been such a recovery and or even increase in valuations, because there is a lot of liquidity in the market still. We just saw a brief low as the pandemic started, but now we can see again that there's been a very high activity. Yeah, Thomas.
Thank you. Do you see the same inflection points, value points when it comes to health tech, e-health, or compared to medtech?
That's a great question. E-health has been quite prominent since the pandemic started, especially remote-based solutions. we've seen that it's been possible to meet the GP, and increasingly more have met GPs remotely. So telemedicine is really on the move. But as we briefly discussed before this seminar, it's all a matter of how you would implement your solutions in the healthcare system. And getting face time with the healthcare system now is challenging, if not impossible. So there is, on a general note, normally a faster route to market, but for health tech, the real challenge is to have acceptance and reach acceptance with healthcare professionals. So that's one of the main reasons where you should include healthcare professionals early in your development, and also, again, not forget about the commercial validation and your business model, and how to in order to be successful. So the earlier you plan for things, the better. Yes.
Because I think it was a very good presentation. What type of founding strategies you should have, depending on if you're early or later.
Yep.
But on the other hand, how should a startup company choose? Because in the beginning they should look for business angels or family offices, which means that they will have a lot of investors, which maybe can be a challenge for a startup company. What advice do you give to a startup company regarding selection of an investor in the early stage?
Well, we tend to recommend that you favor, if you have a situation where you can choose, we favor investors with industrial knowledge, and also with a harmonized investment horizon, so that they wish to stay in the company for on equal terms for as long period. Because if you have different investment horizons in your investor collective, that would mean that they would favor certain decisions that could lead to an exit that fits their needs. Meaning that early on you should try to find investors with a good network that could support your commercialization and a good understanding of your business, and an investment horizon that is long-term and solid.
So maybe next session from you might be how to select a good investor.
That's one good track to pursue. Good. Thomas?
One final. So when it comes, historically, we've seen that the Nordics or life science companies in the Nordics have had lower pre-money valuation than European and US companies. Do you see any trends that the Nordics are moving closer to European valuations, or are we still in the far end of Europe?
Well, there are different hypotheses around why this is the case. It's definitely been the case earlier. One has been that the investor collective in the Nordics there have been not as many venture capital funds as in other countries, in other regions, meaning that it's been a oversupply of potential companies to invest in, which has pushed down valuations. But we're seeing an increasing interest from international investors. We're trying, from our point at Nye Consulting, to lower the entrance barriers for international investors by sharing our investor climate reports, which is available free on our website, for our clients to understand the opportunities and challenges you have externally, internationally, but above all, allowing international investors to understand the opportunities that you have if you come to the Nordics and Scandinavia, as well as challenges and syndication opportunities. Because life science specific investors, they work on a international arena, and we know from a data package and a quality point of view that Nordic companies have high standards and are comparing in a very good way with other ecosystems out there. So we're seeing an increase of interest all the way since 2016 when we started to do our investor climate reports. But we have yet to see the big rise in valuations. I think the more international you get and the better our companies become in finding the right benchmarks and similar companies to compare with, the better. Great. Okay. But thank you so much for attending today, and I look forward to next time. Thank you.